Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is David Kuo, the founder of the Smart Investor in Singapore. David, great to have you on this Friday afternoon.
I know, it's me again. It's like a bad penny. I just keep on coming back over and over again, Brian.
Well, thanks a lot for coming in at short notice. Now, before we get your insights, David, let's take a look at how the crypto markets are performing, and then let's take a look at how regional markets are performing. Now, Bitcoin is still staging its recovery. It's at 34,731. It's up 6.5%. Ethereum is at 1,976.68. It's up 3.8%. Now, if we look at markets across the region, we start with the SGX, that's at 3,122.84. It's up 0.1%. Bursa Malaysia, the FBM KLCI, is at 1,559.88. It's up 0.27%. In the Nikkei, it's at 29,069. It's up 0.67%. Shanghai Composite is at 3,594.79. It's up 0.79%. The Hang Seng is up 1.14% at 29,210. The ASX 200 rounds up the numbers at 7,297.1. It's up 0.3%. David, it's all green across the region. Tell us why.
I think it's primarily because of the US. I mean, we saw the Dow last night up about sort of 300 points. And I think there was some reassuring news from various sectors. First of all, Starbucks, their CEO came out and said that those places in the US where there is a high level of vaccination, they've seen really positive like-for-like sales. So it seems to be that certain parts of America are recovering very, very strongly. In fact, he said the like-for-like sales were higher than before the pandemic. I mean, that is good news. Then we also had the reports with regard to the banks, and they were saying that the bank regulators said the banks were in good shape at the moment, and they can start resuming dividend payments and buyback of shares before the end of this year. So it shows that America is recovering, and I think a lot of people are looking at the US and saying, yes, if we get a high level of vaccination rates amongst the population, then we can start to open, albeit cautiously. But the moment you open, then I think industry will perform pretty well. So, I mean, that I think is a lesson for where you are at the moment, Brian, in Malaysia, and that is to try and get as many people vaccinated as possible so you can reopen your economy. If you don't reopen your economy, things just stagnate. People can't go out and spend money. They can't go to things like Starbucks and any of your kopitiams over in Malaysia. And if you don't do that, money doesn't flow around. If money doesn't flow around, then how are you going to get your economy growing?
Absolutely. But one of the key things also that I think everyone was watching out for, which now has happened, is the infrastructure, the $1.2 trillion investment in infrastructure that's going to happen in the US. Now, obviously, the impact from the US is going to be then additional 1.2 trillion stimulus over the next couple of years. But how is that going to impact Asia?
Well, I think there are two things that will happen. The first one is the indirect impact. And the indirect impact is such that if US companies are doing well, if US consumers, or rather the people who work for those industries are putting money into more money into their pockets, it means that they're going to be able to spend more. And we know that America enjoys buying cheaper goods from over here in Southeast Asia. So you can imagine that if you have consumers in America with money in their pockets, and this is not money that the government is giving them directly, but this is money that they are earning from the companies that they work for, then they're going to go out and start buying stuff. And so Nike will probably try and import more goods from Vietnam. They're going to be buying more goods from other Southeast Asian companies, and that will indirectly impact Southeast Asia. The other thing that I think is going to happen is that, yes, it's true that this infrastructure bill has been agreed by both sides of the House, but it also means that America will have to print more money, and it probably means that there is going to be a slight devaluation in the US dollar. And we've already been seeing that the US dollar strengthened slightly when there were hopes that the Federal Reserve might scale back the amount of stimulus that they're going to be giving. But with this, it probably means that America will, or rather the American government will have to borrow a bit more money in order to get this infrastructure built. If that were to happen, then printing more money just means that the US dollar will probably weaken against many of the Southeast Asian countries. So it means that we are going to feel a lot better because our currency is going to be a bit stronger against the US dollar. And there's nothing wrong with feeling a bit better because your currency is stronger, because it means that you can go out and spend that money when economies open up again, and we can start traveling and our currencies will be stronger as a result.
Now, David, you're an income investor. What are the top 5 stocks in the SGX and Bursa Malaysia that have been giving consistent dividends over the past 5 years?
Okay, it'll come as no surprise to you, Brian, that it's real estate investment trusts. These are almost a proxy for bonds for a lot of stock market investors. And when you have a look at the real estate investment trusts, by and large, they have to pay out a portion of their income to investors, and so they have no choice. If they collect that rental income, that net income that they have to distribute it to shareholders. So real estate investment trusts, whether you look at Singapore or Malaysia, they do look very interesting. The other thing, of course, is about the other sector are the banks. If you have a look at the banks, I think most of the banks, or some of the banks, were prevented in some ways from distributing some of their income to shareholders. But by and large, what they've done is a bit of catch up. Once everybody realized that the pandemic was controllable and the regulators realized that they were controllable, they've started to relax the money that these banks have to hold in case the pandemic was worse than it is. So I would say banks, and I would also say real estate investment trusts, which are a big component of the STI. I'll tell you something else. I mean, there's a whole bunch of companies in Malaysia that are probably flying below the radar of a lot of investors because they're not in the KL they're not in the KL Composite Index. And these are companies like Ajinomoto, Panasonic. I mean, these are smaller companies that don't form part of the KLCI, but in fact, they are very strong dividend payers, and they also have that ability to increase their dividends at a pretty fast rate. And so sometimes when you are looking for income shares, sure, it's great to go and have a look at the main index, the STI here in Singapore and the KLCI over in Malaysia, but also dig beneath the surface and have a look at these small, well, I wouldn't even call them smaller companies.
Ajinomoto is not small, neither.
No, they're definitely not small, but they just don't form part of the main index. And so therefore they tend to fly under the radar. So companies like Dutch Lady is another one, Carlsberg, Heineken. I mean, these are all interesting companies that have tremendous cash flow, and they also have that ability to increase their dividends at quite a phenomenal rate. So don't always just go to the main index and look for good income shares. Look elsewhere and you'll be pleasantly surprised.
Especially with, interestingly enough, that you mentioned Heineken and Carlsberg, because right now they're all shut down. If I haven't looked at their share price yet, I'm sure there should be an impact when you're shut down for 1 month. There could be buying on dips opportunity at this point of time.
Yeah, so you also have to be part value, part income investor. And you have to look through the pandemic and say, yes, the share prices of these companies are a bit on the low side, but at the same time, you have to say, what is going to happen when the pandemic is, well, not the pandemic, but when the lockdown is over and when governments realize that they just can't keep on locking down their economies for long periods of time, because it is going to damage not only these companies, but also the consumers. I mean, the citizens of these countries are not being able to go out and earn, particularly those who earn a daily wage. And if they're not able to go out and earn, it breeds discontent amongst the people. And there was a phrase that was used here in Singapore yesterday, and it was saying that a lot of the people here in Singapore are now battle weary. In other words, they're saying that we've done what you've asked us to do for over 18 months now, and we're really getting a bit battle weary now. We're getting a bit tired. And if we are vaccinated, can we start relaxing some of these restrictions and allow people to go out? And if people do go out, they're going to be going out and spending money. And that is how you get the economies going, Brian.
And you know, we could really carry on that discussion for a long time about battle weariness, because I think that's what people in Malaysia are feeling right now. But thank you very much for your insights, David.
And stay invested.
Yep, we've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. Please check out our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.